Jay Coulter here at the Exchange ETF conference. We're going live for the first time from the conference. I'm with Christian Magoon, the CEO of Amplify ETFs. Christian, what are you seeing in the ETF space today?
Well, there's a lot of people here, first of all, Jay, and it's great to have people back kind of talking to each other. As we're talking, we're hearing a lot of fears about fixed income and bond markets, right? So we're seeing, declines of broad-based bond market averages, now 7 to 8% year to date. Could be the worst year in 30 years in bonds. So that's kind of pushing people to think of how can I hedge against interest rate risk, or how can I get income or material income in a different way? So we've been talking to people about different types of income strategies, whether it's buying discounted closed-end funds or moving to quality blue chip companies, maybe writing covered calls against them to get that dividend and option income. So people are looking at doing things differently now, given kind of where rates are going and where they've gone so far year to date. So I would say that's a big theme that we're hearing, kind of fear about bonds and that traditional 60-40 allocation.
Yeah, that has definitely been a reoccurring theme here at the conference. So, Christian, in addition to that theme, inflation. Everybody's talking about it.
Well, sure.
How do you think financial advisors should be looking at inflation as they look at their portfolios?
Well, it's been a while since we've had to be concerned about inflation, thankfully. And many advisors and investors don't seem to have really any inflation beneficiary allocation in their portfolio. We think that's going to be important in 2022. Certainly, you're feeling it in your wallet. You're feeling it in your portfolio if you own industries or segments that aren't or that are impacted negatively due to inflation. So we think owning a basket of inflation beneficiary type investments makes a lot of sense. Is it a gold? Is it a silver? Kind of precious metals? Is it some of the ag names, wheat, corn? Could it be some digital assets like a Bitcoin allocation? Even maybe home building stocks or real estate focused stocks, commodity REITs. These are all choices advisors have to make, we think, to have some type of inflationary type hedge. We offer all of those in one single ETF in our Inflation Fighter ETF. So we're having a lot of uptake on that. It's a newly launched ETF that Amplify and addressing, we think, one of the biggest challenges of 2022 in terms of other things besides the bond market negatively impacting portfolios.
That's right. And that ETF is IWIN, IWIN. You can find out more information, I believe, at iwinetf.com.
That's right, or amplifyetfs.com for sure. And, it's really amazing just to see kind of these two kind of types of worries kind of run through the market. There's certainly a lot of fear here, but there is some optimism, right? Because there's some type of growth opportunities that are out there that people are starting to focus on. And, a lot of the growth stocks have been impacted by rising rates, but there are certain types of growth stocks or market segments that could really benefit from government spending or legislation. So, two areas that we've been talking to people about and that I think they realize there's some opportunity in are electric vehicles, kind of these advanced batteries. There's going to be a lot of government spending, we think, coming down the pike, pushing that. Certainly you can't turn on your TV and not see an electric car ad. And, with prices at the pump where they are, there's a lot more people searching for electric vehicles and these advanced battery metals and materials that kind of are needed for that. So we think that whole ecosystem is a great growth opportunity with a unique catalyst, again, legislation and government spending. On the other side, cannabis is a little bit interesting here because we're starting to see some legislation on the banking side and maybe even decriminalization side for cannabis. Well, that could be big because many institutions can't invest in cannabis stocks today. Only kind of the retail investors can. And, buying a legal cannabis ETF could be a great opportunity to get ahead of the institutions should major legislation pass. And it seems like that's more likely than not. So those are two areas that aren't really interest rate sensitive. You don't have to worry as much about inflation. These are catalysts that are kind of based on what Washington is doing, and definitely seems to be closer than ever to seeing some positive moves in that battery space and the cannabis space. So two kind of unique growth ideas that are kind of flying around here that we've been talking about and seeing some good receptivity to.
Yeah, so I had a chance to speak with your portfolio manager of the Amplify Seymour Cannabis ETF.
Oh, yes.
That symbol is CNBS. I spoke to him last Friday, and he's incredibly optimistic about what he sees unfolding here over the next 12 months in the space.
Yeah.
Do you have any thoughts?
Yeah, so Tim Seymour, is actively managing our portfolio from Seymour Asset Management. He's really an insider in the space and been investing and talking to the CEOs of those companies for many years. And it definitely seems more positive than ever that this is going to be an issue the government wants to deal with. Even Janet Yellen wants some clarity on that, which is a good piece of news. And the Lord knows we need some more tax revenue here in the U.S., so that's quite positive too. So I think we're going to see more adoption at the federal level and friendliness to cannabis, whether it's banking, decriminalization, maybe even taking it off Schedule 1. And that will allow institutions and large companies to get involved in the U.S. cannabis market. Of course, our fund has exposure to the U.S. cannabis market, not just Canada. Many funds only focus on Canada. We have exposure to the U.S. market, and that could be a massive industry that could disrupt pharmaceuticals, wellness, problems like sleeping and pain, also treat anxiety. So a lot of things that could, I think, benefit U.S. citizens from a well-being sense. Maybe get away from opioids, get away from taking maybe some of the ibuprofen, et cetera. So we're excited about what that market could look like. It's a great consumer product market that's going to be focused on branding. And institutions can't invest in it yet. We can as regular investors through these legal cannabis ETFs. And it's a way to get ahead, I think, of some pretty big money coming into that space once these events take place.
Yeah, so this is our first live broadcast from the Exchange Conference. And Mike Venuto is here, I believe, and Dan Weiskopf from your Block ETF, symbol BLOK. Blockchain, digital assets, Bitcoin have been a big theme here at the conference. What's your take on that space today?
Yeah, so we launched, the first blockchain ETF back in 2018. It's actively managed. It's the largest blockchain ETF and incorporates the underlying technology of digital assets, which is really blockchain. So blockchain is like the internet. It's a technology, and like the internet, there's applications like video streaming or email or websites. When it comes to blockchain, the applications are Bitcoin or voting or tracking inventory or watching shipping routes, etc. So we think this is going to be a very big growth engine going forward. One of the unique parts about blockchain is it does have these digital assets like Bitcoin that are finite. There's only going to be a certain amount of Bitcoin. 90% of all the Bitcoin that's been ever created or will ever be created has now been mined. That gives it an anti-inflationary quality. And certainly Bitcoin is, performed pretty nicely here in this inflationary environment. We own Bitcoin, for example, in our inflation fighter ETF, but we also own Bitcoin indirectly in our blockchain ETF. So we think you have to have some exposure to that area, certainly a growth theme for the next 50 to 60 years. And the applications, I don't think, are even fully known. If you think of the internet, 10 years into the internet, we didn't really realize we'd be streaming so much content or doing Zoom meetings. And I think that's what's going to happen with blockchain. We kind of say, well, there's Bitcoin, but what else is there? I don't think we've seen those applications. They're coming, and they're make really third-party transactions. It'll eliminate those. They'll take that middleman out because that middleman needs to create trust between those two parties. Blockchain really creates that trust level through kind of a digital system between those two parties. And when you think of buying a house, voting, tracking packages, shipments, etc., inventory, supplies, all of those things, having that blockchain automated system to look at records instantaneously can really add a lot of value to the economy. And we're invested in Block, in those types of companies. So pretty exciting times, and we think it's a great allocation on the thematic growth side that really, again, probably is a great counterbalance to what's going on with interest rates and inflation.
Yeah. So before we wrap up, what are your thoughts on this Exchange Conference? I got to tell you, I found it to be incredible. It's great to see people again for the first time in person.
That's right.
Lots of great thought leaders here. What are your takeaways from the conference?
Well, there's a lot of new firms that are here, some that I don't even recognize. And, I think when I entered the ETF industry, we were the 14th sponsor. Today, there's over 200 companies. So it's fun to see the breadth of brands that are here. The different innovations, whether that's now some of the digital or crypto type ETFs, some of the ETF companies that are using options in unique ways to protect the downside or maybe provide more upside for investors. It's great to see many mutual fund names that I didn't know were in the ETF business are now trying to get into the ETF business. So that's helpful because it raises the awareness of kind of the ETF wrapper and some of the efficiency, transparency, and flexibility it brings to investors. So overall, I'm for a big tent. Yeah, it makes it more competitive for firms like ours, but I think it raises everyone's game to create unique products and try to stand out and bring innovations that really help investors achieve their goals and maybe rethink how to help investors achieve their goals. So pretty exciting times, and I'm glad we're in a dynamic industry because the markets sure are dynamic, and we need to keep up with them in terms of our pace of innovation and product development. So great to be here in Miami and see everyone.
Yes, they've done a great job with this conference. To learn more about Amplify ETFs, visit amplifyetfs.com. Christian, it was nice to finally do this in person.
Yeah, good to see you in person, Jay. Thanks.